Well, good afternoon, everyone. My name is David Tingstad. I'm a lawyer at Beresford Booth. I chair the business and real estate group here at Beresford Booth. And you are in for a treat today for our typical Thursday afternoon webinars. I have on the screen with me Stacy Grund, president of Tatley Grund and Grund and Company. Been around since 1898. Not Stacy. He's not that old, but his companies are. And in the last few weeks, I posted a few blog postings on something we do a lot here, which is succession planning. And so it's one thing to hear from the lawyer's perspective. It's another thing to hear from the client's perspective, who's been there, who's done it successfully. And certainly Stacy and his family have been very successful at it. So what I thought we would do today is have a conversation, Mr. Grund and me, about his experience that I think you will find to be beneficial for your plan as well. And one of the most important things that I just want to make sure everybody understands from the beginning is your business will end at some point. You need to plan for it. And so I deal with far too many companies that fail to do that. So with that sort of focus in mind, or through that prism, Mr. Grund, I'd like to turn this over to you, give you an opportunity, maybe tell us a little bit about you, tell us a little bit about your companies, and then we'll have a little Q&A and for the benefit of all involved.
Okay, great. Afternoon, everyone. Clearly, Dave and I have not choreographed this too well because I'm not sure we would have been dressed identically the same on this. And I'm not an attorney, so I'm just a simple kind of construction thug, as I like to say. So I'll try to be brief on some of that, a little bit of background. So one of the companies I own is a commercial painting contractor called Grund and Company. So we're primarily a subcontractor on new construction commercial work. So some of the projects that would be recognizable, we did all the interior finishes in the state capitol back in the mid to late 80s before the centennial. Some special finishes occasionally, like St. James Cathedral. If you've been in the Fifth Avenue Theater, we did all of those special finishes, gold leafing, silver leafing, glazing projects in the Fifth Avenue Theater and the 1980 remodel for that. But most of the work is commercial construction. So done a lot of work out at Microsoft campus over the years. We got probably received the majority of the work down at the Amazon build out for all the office towers over the last 3 or 4 or 5 years. So Home Depot's, Costco's, interior tenant improvement office type projects. So that business was started, as Dave said, in 1898 by my great grandfather. So I'm 5th generation. Started right here in Seattle, and we're a union shop, and we employ on average about 100 people in the field and 15 or so in the office.
Yeah, so as you can tell, Stace, you guys have been around a while. You really passed the company through 5 generations. Did I hear that right?
Yeah, 5 generations. And there was a little hiccup in the 3rd generation. My grandfather, Grund, married the boss's daughter, and last name Jacobson at that time. And it was pretty good that the 2nd generation, when her husband passed away, the widow sold the business to her son and son-in-law, and it became Jacobson and Grund Painting. And those 2 guys, brother-in-laws, were best friends for 40 years or so, and they ran the business as such. And it was smaller, more residential, painting then, and a little bit less commercial. And it was actually the next generation. So it was the 4th generation, and my grandpa Art did not get along with his nephew Fred very well. Oh. And so they split the business at that time, and it became Grund and Company, and then Jacobson and Sons. And the 2 brother-in-laws split everything right down the middle, and they talked to the crew, and they divided up the crew based on skill set. It was very amicable, and they remained good friends till both of them had passed away. And unfortunately, my grandpa was right. The nephew Fred ran that business into the ground, Jacobson and Sons, in about 3 years.
Huh.
Unfortunately, Grund and Company kind of survived. So
Got
I
it.
worked summers at high school and college in the painting business. And then when I graduated, I moved into the office. So that was 34 years ago.
Well, you cut me off at my next question was, it was kind of how long have you been in the family business? So a very long time.
Yep.
And what about when did you start to have conversations about becoming an owner, taking on more responsibility? Just sort of how did that work for you in your situation?
Yeah, it was with my dad and I, it was a little bit faster. So in my experience, we have an executive committee, and the company was much smaller back when I graduated in '88. The business was doing about 3 million a year. Now I've started 2 other businesses in addition to that original one. So just to give you size, is we're 30 to 35 million a year in revenues. So we have an exec committee. We did back then, and I started right away in that, getting experience in banking, bonding, insurance, kind of legal matters. So that really helped get the exposure. And then we just started planning on that. My dad essentially kind of wanted to exit out, somewhat fairly quick. So, and then we took it was a good 10 years or so of kind of planning and working through things until his essentially to where he was out most of the time. So it was about a 10-year window.
Well, so in my experience, Stace, that's very consistent with what I see in family-owned businesses. And I think a lot of people would be surprised to hear, you've got to be kidding me, 10 years. But that is not at all unlikely. And so that your experience as you move forward into having more detailed discussions. So with you being involved with the executive committee, I mean, is that where you got all of your exposure for? I mean, because there's really sensitive information, obviously, that any company has: financial information, employee information, who are the good ones, who are the not so good ones, and sort of, where all of the skeletons are buried, so to speak. How did you get introduced to that sensitive information, and sort of how long into when before when you were employed versus when you sort of started having those conversations? Was it really right away?
Yeah, for my dad, the plan was right away. And so I started sitting in on that, and, graduating college with a business degree, but really understanding financial statements, you do need some laps around the track. And it was, it was 2, 3, 4, 5 years before I really kind of got a pretty good understanding of our business and the financial aspects of the business. So from that standpoint, it was beneficial to sit in there and have that experience and that exposure pretty early on. Currently, it's the same way. The financial information is held pretty close to the chest. So those in the executive committee see full financial information. We're an Chapter S, so corporation. So, or I'm sorry, an S corp. So everything pretty much, myself, my wife, and I in the business are pretty well linked. So everybody in the exec committee knows pretty much everything about me financially. So it's a pretty small. There's 5 members, including myself, in that regard.
Got it. So in terms of the rest of the family, so to speak, as you make a transition to your ownership, how involved was the rest of the family as part of that, and what role, if any, did they play?
Yeah, actually, interestingly enough, very, very little. So it was primarily just my father and I as the 4th and 5th generation that worked through it. Unfortunately for me, I had an older brother and a younger sister that have both predeceased me, passed away, one at 16 and one at 45. And So that my older brother was 16, likely might have gone into the business. So unfortunately, that option wasn't there. And then my younger sister was not interested, and she passed away at about age 45. So though some of those issues with multiple siblings, we just didn't have in our situation. In fact, we've had that very few in the 5 generations, probably one of the reasons why we've made it 5 generations. But that'll springboard me towards something that I've thought a lot about with my kids, as now I'm 5 to 7 years away from that same transition. And I think, like all parents, it sounds a little corny, but it's really true. You just want them to be happy. So it's really not that important to me that there's a 6th generation. I'd much rather the kids be happy and go do what they want to do than apply any pressure to them. But if they do want the opportunity that I was given, I've told them this actually for quite a while, all 3 of them. You'll have the same opportunity if you want it. We'll make it work. But you can work there 3 or 4 or 5 years. And if my executive committee and myself believe that you have what it takes, then we'll talk about going down the path of ownership. But I'll use them as non-biased kind of advisors to do that. But at the end of the day, there's kind of 3 things that are out there, and it sounds corny again, but we have some really long-term employees here, 20, 30, 40 years, and people, and a lot of people that have that long. It's really important to me, the employees. That's one of the best means of kind of gratification that I get is with the employees. So that's really important to me. It's the kids' inheritance potentially, and it's mom and dad's retirement. And if you don't have what it takes to run the business, you're not going to be the guy or the gal. You can work here, you just won't be the guy or the gal. Yeah. And so, because it takes, just you got to have a stomach for it, acumen for it. Not everybody's, an entrepreneur in long hours. And so we'll just see if you have what it takes. And if we think we do, then we'll talk about ownership. And if you don't, then fine. So sounds a little bit more cold, but I think most businesses, as you probably tell people all the time, especially in construction, they're going to fail on the 2nd or 3rd generation because it's assumed that the kid has the ability and the want to, and often that's not the case.
Right. Yeah, no, that's exactly right. Well, so you've identified an executive committee. Maybe give us just a little bit of insight into how big that executive committee is or was, and how you chose who to be a part of that. And then we'll maybe transition into a little bit of maybe some people who are even outside your business, some other team members. But for now, tell us a little bit about that executive committee.
So for us, it's I'm the president of Grund, one of the businesses. There's a president of Grund Painting. So the 2 of us, there's a vice president in each company, and then our CFO, the accounting group of 7, they handle accounting for actually all 3 companies. So that's the exec committee. So we run that for both of the 2 main businesses. The 3rd business is a little bit smaller, small manufacturing business, and that's really kind of kept separate from the 2 construction companies. So it's really just a group of 5.
Okay, and so you invited them, or they are part of the saying? Process of who, if they have what it takes, so to speak. Is that that's what I hear you saying?
Yep, that's exactly right. And I guess the other thing that I can tell you, and maybe you were going to get to this, Dave, and I know that it's a little bit interesting, but going back to my experience with my father, I guess, and we get along great. I talk to him all the time. We've never had words between my dad and I. We're very fortunate that way. But it doesn't mean there wasn't a few frustrations. And the few frustrations actually were around this transition process. And it really got to the point where I had to grab him as a relatively young guy, 30-year-old, and kind of say, Dad, I think for us, you either need to be in or out. And so to still be gone for 6 weeks at a time, be the guy or gal, and then be gone. He was a world traveler. He'd be gone 6 or 8 weeks or go somewhere and then come back, and he'd want to sit into a meeting. And I would find myself going backwards 4, 5, 6 weeks. And I was getting frustrated. And so was my staff, project manager, superintendent on a job, to where, why are we spending this time telling the other Mr. Grund what's happened the last 6 weeks? And he would want to come in and kind of still call the shots. And it got to be very kind of disruptive and problematic. So we essentially had that discussion, at least in our business. You kind of need to be in or out, or find a different advisory role, but not in the day-to-day operations. And so I'm mindful of that moving forward with myself.
Very, very interesting. No, I think that's a fabulous point, because it sounds like the importance of having clear lines really is one of the things that kind of prevents misunderstanding, because you're going to also, you have this challenge of communicating this with with your staff. How did that process work, or is it just kind of a natural outgrowth because you were there all the time?
Yeah, I think it was the latter of what you said, especially when I went through, the company was smaller. It was one company. We were smaller at the time, much smaller revenues, smaller staff. There was 6 or 7 in the office, not 30 in the office, and a total of 50 employees, not 250 employees. So moving forward, I'm much more mindful in my transition coming in the next 5 to 7 years about, and so it's very timely topic because right now it's top of mind to start this process over again. And I'll be much more communicative with the employees, let them know what's happening, and kind of get those lines set.
Okay, so as part of this process, at some point, you got some outside advisors, I assume, accountants, lawyers, this sort of thing. What did you find about bringing in outside folks that was either helpful for the process, or you wish we could have done that differently, or we could have done that better? Other people other than accountants or lawyers, what other folks did you find helpful?
Right. So we went with an outside accountant. So essentially the same firm that we use to do our review. Our books are not audited or a compilation, but a review status. And then, so with our outside accountant, since they're familiar with us financially, an attorney that we had worked with some, not a lot, and then an insurance professional to see if we could use insurance policy to help with the transition of that. But back, 20 plus years ago when we went through this with my dad, the estate taxes, federal, were a much larger issue to try to figure out. And how are we going to keep a smaller business without liquidating it to pay the death tax, right? So those are still considerations and where insurance could be. So I'll try to be succinct, but kind of an interesting story I think many people might appreciate. I like to say I essentially bought the business twice, and it was essentially on poor advice from a few of those advisors. So one of my takeaways, if you were to ask me, is really try to vet out better, industry professionals that have more experience on this. So we essentially started down the path of my dad would gift shares to his wife, my stepmom, and they would both gift me that. So in simple terms, it was $10,000 a year that you could do that. So they were gifting me $20,000 a year. Meanwhile, I put my dad on, we put him on an employment contract, but that could maybe pass the IRS test, but he was actually retired. So we go down, that was from like 98 to 2008. And so 10 years of that. And I figure out that, the growth of the company during that period of time, I wasn't keeping up with the amount of shares that we were transferring. And his net worth of the shares was worth a lot more than when we started. And I was paying him a pretty nice salary at the time that he left, as essentially buying the business. So I said, well, we're going backwards in this situation, and it's not making estate planning any easier. And essentially, he still had kind of majority control when he didn't want it. So we switched, got better advice. We went to a QSST trust, a qualified subchapter S trust, actually sold the shares. But at the time, it was a third-party transaction. We had to go get it evaluated. So 10 years later, the business is now 2x of what it was when I started buying it 10 years before that, after paying him. And so if I would have just got better advice, then I would have been paying a much lower rate. So kind of funny, but that's where I like to say my dad got the best of me again. And I ended up buying the business twice for a period of 10 years. So.
Well, yeah, and it is fine. I mean, none of us have a crystal ball, and I'm gonna defend your lawyer, who wasn't me, by the way. But in any event, it is. But what you point to is the difficulty. You've identified a number of different challenges all throughout that. The gift tax consequences, the estate tax consequences, the employment issues that you've identified, and that's kind of on the seller side. You haven't even talked about that, though, the consequences now for you, as you have dealt with, other than, I guess, paying your dad twice. That's certainly a consequence to you, but the legal consequence associated with, okay, now I got to create a trust, and your situation is a very common one in terms of starting down a road and then going, hey, wait a minute, this isn't working. And so good on you for raising your hand and saying, hey, this isn't working, because that's one of the reasons why things fail a lot of the times, is you start down a path that seems to make sense at the time, but without the ability and the relationship to be able to say, hold on, and revisit it. So because then there's a lot of anger that sometimes develops in the family, and from a planner's perspective, we get really nervous because one of the things we want to do, first of all, is do no harm, and we want to, and that means let's keep the family together as we go through this process. And so we can screw it up, and we try to be really careful, obviously, to consider the familial issues, which are more important. But if you can't have those open and honest conversations about difficult things like what you've talked about, that's kind of a recipe for disaster. So you did a really nice job of having those conversations early. You took a very long time to do it. And that's one of the things I guess I would say, that some things that I find for successful transitions, they take a long time, much longer than people think. And you have to be open to the idea that, okay, we started down this transition and we got to tweak it a little bit, or maybe completely rework it as you guys did. So that's kind of sort of some things from an outsider's perspective for those people who have a family business of whatever size, have kids. Well, I mean, what would you say to them about whatever the transition is, whether it's a transition from current owners to employees, or transition to family members? From a business owner's perspective, what would you say to them? You really need to think about this.
Yeah, and I would say, boy, just transparent, open communication. So, if it's the business owner, and if that's, mom and dad in our situation, we can get input, but ultimately it's our decision. The key is to just communicate that decision. So there's no, I think not knowing leads to more stress and heartburn with the family than just knowing. And so this is the decision. This is, we've vetted it out. You can have questions, you can have input, but essentially that's the decision and where we're going. So at least you understand where we're at. Some of the experience I've had is that I've seen with others is just the frustration of not knowing. Somebody didn't tell me. It's almost even like in an estate, in a will. Well, I thought it was this, but nobody made it clear ahead of time. And it's okay what it is, as long as, it'd be nice to know what it is. So right. I think it's that. I think it's just kind of that clear and somewhat regular kind of open communication.
Yeah. Yeah. So I think that's exactly right. And that right there, I think is way better than, frankly, than a bunch of legal advice, because it's the relational thing that is so important. A good relationship can solve a lot of other problems. And it's interesting what you've mentioned about your relationship with your dad. Because here you've made this successful transition to yourself. In terms of the relational payoff, can you maybe just shed a little light on how this transition process has impacted, it sounds like for the better, the relationship with your dad? Do you think that's a true statement?
Yeah, I think it is. Yeah, it definitely is. And I'll share with you guys a little observation that I've had. And I might be the very same way, but as a business owner, and those that are in that chair, it really is like a lot of us with your job and family and other things, but even with that, in that regard, maybe not more so, but, sometimes your profession goes towards part of your identity and a little bit of your ego and kind of who you are, and you spend so much time at work. And so I think having a smooth transition between my dad and I noticed that he's 80, going to be 81, but even up until the last few years, in different social circumstances, he would say, well, this is my son, I'd like to meet you. He runs my companies for me. Well, I bought him 20 years ago, so I'm not going to correct him and kind of, support him in that, but it helps with that identity and a little bit of that, still that connection. And if it was a hard break, he probably wouldn't say that, but since it was a smooth transition and break, it's helped him keep that identity and kind of who he was.
Yeah, you bet. Well, listen, we're running short on time here. Stacy, I really want to thank you for hopping on here. And if I could just kind of summarize here a little bit for everyone. Stacy's experience, while certainly unique to him and his family, most businesses don't never make it past the second generation. And so right out of the gate, Stace, you're better than about 85% of the businesses out there. So I tip my hat to you on that score. But going all now as far back as you have to 1898, I mean, it's really a remarkable story. And in addition to that, I can tell you also from personal experience, you guys do great work. And that, of course, has to be a given for any business to do great work, to do it for a fair price, take great care of your employees. And so it's just one of those things that I think is an outgrowth of being that family business, taking the care to transition to someone who can do it. And that was one of your first points. Look, if you're not the person who can handle doing it, and you have to make that hard decision. So make that hard decision about whether or not your family member can do it, because there are other purchasers out there. I mean, you probably have other alternative states in terms of transfer. And so if you're thoughtful about it, you have the right person, right people to take it over, and frankly, it takes a long time, and start early. And certainly that's something again that we here at Beresford Booth do a great deal of, and it's a privilege for us to be a part of it. It's absolutely it makes our hearts beat very fast because we don't want to screw up the families, and so certainly with a business like yours, Stace, that's even more so. So I'll give you the chance maybe to give the last word. Well, no, I won't, because I'll still say it at the end. But anything more you want to add here, just to give us a good word?
Not specifically on that, but I guess I would repay the compliment back to you and your team at Beresford Booth. So we've been together about 10 years and just have always received excellent service, very responsive, and and very affordable from what my experience has been. And so, yeah, when Dave asked, absolutely, it's a great relationship. It's one of those long-term business relationships. Like a lot of businesses, it's banking, bonding, outside accounting, insurance, and legal. Those are those long-term relationships. We don't move them very often. We'll check them price-wise every 5-10 years, but those are important because they know your business and you get so much more out of it. And so, Dave and team is definitely right there for us with our business.
Well, thanks, Stacy. I appreciate that. I paid him handsomely for that compliment, and I take it in all seriousness. It's very meaningful to me, Stacy. So thank you. Certainly, the feeling is mutual. So next week, Matt Cruz and our probate and estate planning group will be on the clock for the webinar. It's going to be fantastic. Check our website for the topics. Again, every Thursday at 12:15, we'll have a webinar. You can hop on, look on our website for the topics we rotate through. And Stace, again, thank you so much. I really appreciate your time. And give us a call if we can help anyone out there with your business succession planning. It's a lot of fun to be able to do. So thanks, everyone.